Hi, everyone, and welcome to this morning's live stream. It's Monday, the 15th or the 14th. I think it's the 14th of July. It's Bastille Day. Up the revolution. We should see lots of nice festivities in France today. Um, it's a bit of a quiet day with regard to the market, but it's a very, very busy week. And often, what happens is to the markets, as I said, it can be a little bit quiet because all the fireworks are going to be later on in the week. We've got CPI, we've got PPI. Over the weekend, we had the sort of usual tariff news coming in. Futures opened gap down, but I believe they are recovering. That gap looks like it's going to be closed. But generally, the market condition today is sort of a little bit quiet, and we're going to look at some charts to see so that we can show you how you can kind of pick up that kind of mood that we have at the moment. I mean, those of you who come regularly will know we talk about volatility. We have a specialist volatility indicator. We also have another indicator that can help us identify these sort of not doldrums exactly, but these congestion periods and these sort of range bound markets. As I said, that's the kind of market condition we are facing at the moment. And there's a fantastic example on cable this morning. So what I'm going to do is I'm going to share my screen straight away. If I bring it up here, where are we? It's down here somewhere. That's it. Share. Hopefully it will come up. There we are. Hopefully you can see that. David, can you see it okay? Just check with David. Yeah, can you see it okay? That's fantastic. Right. This is my workspace for cable on TradingView. I have the daily, I have the hour, I've got the minute, and I've got the 2 minutes. Just before I actually go to cable and look at it in more detail, I'm just going to bring up the Dixie because a couple of sessions ago, I highlighted the importance of looking at the slower time frames to see if we can get an idea of where the price is likely to be going next. And I highlighted actually the monthly chart. This was last week, the beginning of this month. And I pointed out this 97 level. But what I also pointed out, for those of you who came along, was the volume price analysis element that was on this chart. In other words, we'd had, as you know, the dollar has had a big fall. We can see here, big fall with the volatility trigger being activated. We've got a wick to the bottom of the candle, so obviously some buying came in as it hit this 97 level. Now, why did I point out the 97 and why did I say this was an important level and to be aware that possibly we could see a bounce in the US dollar? This is on the technical picture. There are other reasons as well, which I'll mention to you. And it's really VPA 101. You've got falling prices and you've got falling volume. So what can you expect? Well, you can certainly expect a pause, if not perhaps an outright reversal. But as always, when they fall so heavily, to reverse the momentum that has been in this fall takes time, and which is why markets always move higher much more slowly than they do when they fall. But I think the importance of this level is we only have to go and look over here to the left hand side, and we go back to where are we here? April 2022, and we can see we had a very similar situation in the sense when it got to this level, and it was the start of a very strong rally for the dollar. That is why this level is so key. Now, it's not exactly reverse strongly, but it's enough to at least tell us that this is what is likely to happen around this 97 level. Now, there are other reasons as well. The dollar is extremely oversold on the at the CFTC from the COT data. Everyone is very, very short. And when you have a market that is so heavily biased to one side, inevitably you almost get like a knee-jerk reaction. So that's the technical picture. There is a fundamental reason as well, i.e. from the COT data. The trouble with the COT data is when it's released on the Friday, like last Friday, it's actually based on what was happening last Tuesday. So when this data comes in on Friday, it's what the numbers are tomorrow. And it will be interesting to see at the end of this week if, in fact, some of those positions have been cut back and there has been a reversal, because it's quite extreme at the moment. So I said today is a quiet day in terms of fundamental news. And although there has been some movement, as there almost always is at the London Open, it's not been it's kind of fizzled out. And we're going to look at the 1 minute chart, we're going to look at the hourly chart, and we're also going to look at the daily chart for cable. And we have the sort of the reverse of obviously what we see on the Dixie, because these yellow lines are my daily levels that I've put in. I put these in manually. Then they're not derived from any indicator. I just eyeball it, and I sort of look at the last time, how many times a level has been touched, did it bounce off, and then I take the monthly chart, and because I color code them, monthly levels are in blue. And in fact, what we have here, we had a break higher and a break through this level, and we can see, nice rising prices, but the volume really doesn't correspond very much with the price action. So you get a mirror image of what's happening on the Dixie, and ironically, it also hits an important monthly level. And what do we have here? Well, we look like we have the beginning of what could be a 2-bar reversal for the British pound. So that is on the monthly. And returning to the daily, obviously we see that in more detail. That's when it got through, and the failure to actually hold that level. And we've got a nice little shooting star here, and we've got a pivot that's been triggered at the same time. Now, on a day like today, let me bring up the monthly chart, because that's the 1 minute chart. I do beg your pardon, because people often ask us about VPA. Well, does it work in all time frames? This is the VPA, which is really an explanation of the price cycle that the markets are fractal in nature. In other words, this type of price action, which just happens to be on the minute chart, if we didn't know what the time frame was, this could be anything. It could be an hour. It could be, and we didn't have the time down here. A chart is a chart is a chart, and you will see the price action cycle through the same cycle. So you will get a trend, you will get congestion, you will get a break higher, you will get a congestion, then you break a break lower, then you get a bounce higher, etc., etc. And this is what you will see all the time. Now, how do we know when we're coming into a congestion? How do we know when we're in a trend? Definitions of a trend, there are lots of them out there: higher highs, higher lows. You can use lines, you can use horizontal lines, you can use diagonal lines, you can use all sorts of methods. A congestion is first of all, traders are always very nervous about congestions. They really dislike them very much, because if you really get caught in a narrow congestion, you can very easily get cut to ribbons. Now, this is where this little yellow pivot can come in. So it's one of the earliest indicators that we developed. All the indicators, by the way, are available from quantumtrading.com. And what it does, it helps you mark the highs and the lows of a congestion. And then you can put your lines in. And if we look back, you've also got pivots in a previous congestion we have here. There's a nice little congestion there. And what happens is it'll start. You may also get a pivot in a pullback. But really, what you want to see, we've got another little pullback here as it goes higher. You really want to start seeing them come into their own once the price moves sideways. And I just thought this was a really, really nice example of, first of all, the Wyckoffean price cycle, trend, congestion, the breakout back into congestion, and breakdown. As I said, you can join up the pivots yourselves. You can put your lines in if you want to give more structure to the chart. But there's also something else I want to say. This is the 1 minute chart. When we look at the hourly chart that we have here, again, I've got the pivots, but what I've also got here is I've got the Camarilla indicator, which we use for support and resistance. The third and the fourth levels are very important. It's where price is almost 100% likely to pause. Sometimes it reverses at these levels. But there's also two other levels which are important, and that's the R1 and the S1. It's called the buffer zone. It's called the neutral zone. And it doesn't mean that price doesn't move from the R1 to the S1 and back again, but it also tells us, certainly on the hourly chart, that at the moment this price it's the cable is range bound, and we can see here it's broken back up the S1, but we can see here in the last couple of hours, whilst there may have been potential trading opportunities within these hourly candles, this is 9 o'clock our time. That's the London Open. That's 8 o'clock. The usual sort of trap moves are in there. You can see here in the last couple of hours, the price has been confined to 134. What's the high? 134.89 and 134.72. So really, not a huge range. And this candle that's forming at the moment is also really hasn't moved very far beyond that range. It kind of tells us nothing is happening very much in this pair. It doesn't mean that on the very fast time frames there aren't opportunities, but they are not going to take a whole bunch of pips. And if you are a very far, a trader that likes to trade on the seconds charts, and I'm talking 30 seconds, a 1 minute, a sub 1 minute, and David is one of those traders, and he can talk in more detail about that. And if you've got any questions, he's really the person to answer that question. So the hourly chart gives us the Camarilla levels, where the price action is at the moment, what we can expect on the faster time frames, and we can see the pivots being fired all over the place. And when you see something like this, you can then make a decision. You can say, I'm really going to stay out of this one. I'm going to find one where there's more of a discernible move, if you like, a stronger move, because at the moment it is just going up, down, up, down. If I'm on the 15-second and 30-second chart and I have an opportunity, well, that may be a different story. And if we go back and examine this again, where are we? 7 o'clock our time here in the UK is when the Europe opens. And we had a little bit of a move, and then we go into this congestion. We've got pivot to the top. We've got two pivots at the bottom. So that gives us our low of the session, if you like. It's a fairly, easy to recognize that. We've got a little sort of hammer candle. We've got decent volume coming in, but then it just keeps going sideways, and it waits for the London session. We didn't have much of a reaction actually immediately at the London session. Huge amount of volume came in, totally out of whack with that. So that kind of is an anomaly, and we didn't really get the volatility coming in until about at 10 past 8, as we see here. And we've got this, David and I will call these classic trap moves at the open. Pivot was fired here. It also gives you the highs and the lows. So you could say, well, once it clears there, the volatility dies down. And we do get this little move here higher. What do we have here at 34.65? And where were we up here? Probably 65. It's about 10, 12 pips. I mean, it looks very impressive, but because we've looked at the hourly chart, and we can see the kind of range that we're in at the moment, it's really not that impressive as a move. But what is impressive about this chart is this beautiful, if you like, explanation, visual representation of what price action does according to the Wyckofian and VPA price cycle. So there we are at the moment, and let's see what happens. It's certainly not one that normally cable is one of my favorite pairs, but it's really got to do something a little bit special for me to want to do anything with it today. If we actually put also the Camarilla on here, because the levels that are on the hourly chart are going to be there all week. That's really, really important. Whereas the levels on this time frame, up to but not including the hour, they're refreshed every day. And what does that tell you? So looking at just the price action itself will tell us we are in a congestion. The pivots have defined those levels for us, but actually we are an even bigger congestion because we are also between the R1 and the S1 on the on this time frame, which tells us, which is a double confirmation that possibly this is not the pair to be trading at the moment.